Thanks everybody for joining us for another rendition of KeeperDAO Community Calls. I'm What's the Deets, and we are coming to you live with a couple special guests today. We got a fun call today. We're going to be talking about some proposals that are going to be happening, that are actually live right now on our forum, so forum.keeperdao.com. And our special guests today have written proposals that they want to talk about, kind of their reasoning behind their proposals and the value that their protocols and companies bring to that proposal. So let me first introduce them. So first we have Bear from the Bankless DAO here, and he's going to talk about what the Bankless DAO is and their movement, as well as the BED Index and their proposal to have our treasury invest in the BED Index. And then the second group of speakers we have today is going to be the folks from Maple Finance and Maven 11. So we have Sid, Balder, and Gabor. They'll be talking about Maven 11's role as a pool delegate for Maple Finance's decentralized corporate credit platform, and which provides undercollateralized loans via their lending pools. So we'll get into them in a minute, but so today we'll have Bankless DAO give their presentation, and we'll ask them some questions. We'll then get over to the Maple and Maven folks and have them present and ask some questions, and then we will move the conversation towards our KeeperDAO Treasury and upcoming governance activities. And then if we have some time at the end, we can take some community questions. But why don't we go on ahead and just get started? And first, hey guys, how you all doing today? Thanks for joining us.
Thank you for having me. Also, my colleague Bo is in the audience. He's raising his hand. What's the deets? So if you could bring him on stage too, that'd be great.
Thank you for letting me know, and I'm promoting him up to the stage right now.
Same here, what the deets. Together here with Sid, so looking forward to this.
Hey guys,
thanks
for participating.
Fantastic. Well, why don't we, without hesitation, hop right in, and let's let the Bankless guys take over here and tell us a little bit about Bankless DAO and their proposal for the BED Index.
Yeah, so I'll first start off. Hey guys, my name's Bear or Ayrton. I work for Bankless DAO and Analytics Guild, and very excited to speak with you all about the BED Index. And just wanted to give a quick intro. First started out with Bankless back in February. I first got involved with the newsletter. Then when the airdrop happened, I became a member, and then I've just been contributing ever since. Currently getting my master's. I'm at Georgia Tech, so I'm very excited to be here. And I'll actually turn it over to my colleague Bo to introduce himself as well.
Hi everybody, Bo here. Got a long history in financial services generally, and on the buy side primarily, and also in the fintech 2.0 space, and have been involved in Bankless and the Index Co-op, and I'm happy to answer any questions anyone has. Thanks, Bear.
Awesome. So, Bear, why don't you just give us some background on how Bankless DAO started and what you guys are looking to achieve through your DAO?
Absolutely. So Bankless DAO was first started. It's an organization behind the Bankless brand. So as you may all well know, Bankless on the podcast was created by Ryan and David Hoffman. And the Bankless DAO was launched on May 4th, 2021. And so the whole mission of Bankless is to really help 1 billion people become bankless. And we have been a leading provider in the media content, culture, and education provider in DeFi. And we're really trying to help drive the awareness of crypto, as well as also become bankless for all of our members. And so the Bankless DAO and Bankless are two separate entities, right? So Bankless obviously is a legal entity on a centralized manner, and Bankless DAO is the decentralized autonomous organization, or DeFi, if you will. So that's the two key distinctions between Bankless and Bankless DAO.
Awesome. So why don't you hop right in and talk about how the BED index was formed? You know, you're working with Index Co-op and DeFi Pulse to make that happen. So why don't you give us some more details about that?
Yeah, absolutely. So one of the reasons why the BED index was created is we want to take an easily crypto-friendly asset or index to invest in. And so with that being said, if you look at traditional indexes in TradeFi, you have high fees. So you have broker fees, you have management fees, you have fiduciary fees, all these different fees, and it's managed by people, right? And so with that being said, you have a lot of interweavings of managed funds, mismanaged calculations, timing in the markets, and that sort of creates a lot of self-dependence on these brokers. And the reason why the BED index was formed is we want to have something that was easily understandable for people. We want to have the top 3 assets in crypto created into an index, reduce the volatility, but also have the same risk and rewards benefits that we all see in crypto today. And it's to encourage people to go down the rabbit hole of crypto, if you will. So when I first started getting into crypto, I looked at Bankless, and then I started looking at Ethereum, and that promoted me to go down the crypto rabbit hole, which is where I am now. And the BED index is comprised of wrapped BTC, wrapped ETH, and DPI. And so a common theme that you may hear sometimes is the BED index is an index within an index. And if you look at it very carefully, the DPI index is an index comprised of 17 different components of DeFi. And when we say it's an index within an index, all 3 of these assets make up the BED index, and then DPI is its own index. And it was really created by the start of Index Co-op and Lucas Campbell, who is an editor for the Bankless team. And they all thought that if we're going to help onboard 1 billion people, we need to make an easily understandable index to invest in. And that's how it got started originally.
That's awesome. So looking at, you know, kind of your proposal here, can you just walk us through, you know, for people that don't have, you know, that haven't read through your proposal, can you just walk us through the key highlights of what you're looking for?
Yeah. So one of the key highlights that we want to talk about, and Bo can allude to this as well, is we want to create a sort of diversified portfolio, particularly for the treasuries of these protocols. And what that means is we really want to enable a diversification to avert risks in the crypto markets. To invest in an index like the BED index, it's unique because it's not self-reliant on Ethereum or just BTC. You're now getting it compiled into one index. It's rebalanced every month, and the algorithm is calculated correctly based off of equally weighted constitutions of store of value, programmable money, and decentralized finance. And Bo can actually touch on this a lot more as well. So Bo, if you could just explain a little bit more about the diversification aspect as well.
Yeah, sure. So from a financial point of view and from a treasury perspective, I feel very strongly, and the rest of the team, you know, both at Bankless and at the Index Co-op, are really firm adherents to the idea that treasuries need to be diversified, especially in highly volatile circumstances. And the diversification play is really an intelligent one here, as presented by the BED index, because we've got a way to diversify away from the potential, even if momentary, downside risks to the core holdings at KeeperDAO, and yet maintain a the exposure to the coins we know and love, and because these are all by definition blue chips, they're going to inherently be more stable and still provide that upside. Now, that isn't to say that it won't be riding the waves of the ups and downs, but it does tend to dampen, because of the mix in the BED index. It does tend to dampen moves, and yet, you're not exchanging a lot of upside for a lot of protection. So imagine a scenario where your core holdings tank. You need to have another asset that you can rely on while you're either rebuilding or waiting for the world to return to a place where it's recognizable again. And we certainly wouldn't rule out the idea of diversifying into non-crypto holdings, but this, I think, is a core holding for any treasury.
That's some really good insight. So looking more into the BED index, a part of your proposal, or at least a part of the index is the streaming fee. Can you talk about how that streaming fee, where that goes and how that's utilized?
Absolutely. So the streaming fee is an annualized 0.25%, right? So this streaming fee is an annualized fee on the total market cap of the set that the set creator, in this case, KeeperDAO, may accrue at any time. So to give you a little bit more quantitative numbers, if you will, if KeeperDAO decides to go at the million, right, that would be a $2,500 fee over a year. So that fee gets split out half to Index Co-op and half to Bankless. So the fee in total would be about $1,200 to Bankless and then $1,200 to Index Co-op. And this fee is really just revenue for the index being created, and it's revenue that goes back into the DAO. So if you think about it, most traditional finance companies, they charge on average of about 5%. So if you were to have $1 million, you use the 5% rule, that would be $50,000. We think actually the streaming fee is very, very friendly for the treasury, as well as also it is for both sides. And to kind of take away, I guess, from the streaming fee, if you will, for a minute, to put the cherry on top of this proposal is you have this unique social capital that is Bankless, right? So Bankless has about 100,000 followers on Twitter, and the Bankless DAO has about 18,000 followers on Twitter. So you're actually utilizing both social capitals to therefore increase your network effect for KeeperDAO, and as well as also increase community engagement as well. And I think that's what's really unique about having Bankless with this index in Rook, is we are aware that you guys are the largest holder of Ethereum, but I think that this index, as Thibault alluded to, is it diversifies the treasury. You don't have to put it in a balancer pool. You don't have to deal with trading fees in a balancer pool. You also have this rebalancing index every single month. There's no manually process to create these weights with the balancer pool. And I think it's just an overall very friendly way to expose yourself to the top 3 assets without having to hold the underlying assets.
Very interesting. That leads me to a community question we received, which was, while your indexes have ETH and BTC, have you considered using productive versions of these assets, in WBTC or an ST ETH, or something like that, where you're still going to be able to capture the full value of that asset, but it also has the productivity from one of those other protocols that it's wrapped in.
I think we have definitely considered that for sure. And those are options that we are definitely looking into going forward. You have to remember is that this index was formed back in July 15th of 2021. So it is still relatively new. And again, who knows, we could update the weights. We could update it to these more productive versions. The possibilities are, again, endless in crypto. So those sort of things we can definitely consider. But I think for now, for the time being, wrapped BTC and wrapped ETH is the way to go, and is more of a productive way than using just straight BTC and Ethereum as the underlying assets. I think there's definitely a lot of things in the pipeline. There's a lot of things that we're working on a development standpoint, and I think there's a lot of possibilities going forward.
Awesome. Well, I just got two more quick questions for you, and I know that you and I had talked about this earlier, but can you talk about, what goes into building an index, and specifically, as many of our community members ask, how can Rook get considered to be included?
Yeah, definitely. So one of the things that you have to consider when you're forming an index, you have to look at it from a bunch of different components, right? So a bunch of different requirements. So there's a market requirement, there's a technical requirement, there's a safety requirement involved. So from a marketing component, you have to have a large cap valuation of about $25 billion. And also the component must show signs of heavy usage through a smart contract network. From a technical aspect, it also needs to be, and this goes in particular with the BED index, is that it needs to be available on the Ethereum blockchain. It needs to be trust minimized assets, and the token must not be considered a security by the corresponding authorities across different jurisdictions. So there's definitely a lot of, protocols and measures to ensure that we have the highest quality of indexes. And also from a safety standpoint as well, we want to make sure it's a very well established safety guarantees, and that any protocols are reduced from and conducted with security audits, as well as also with security professionals to ensure that there's no hacks or lack of governance control as well. So in terms of considering Rook for an index, there's definitely possibilities. I know that one of the things that you and I touched on, what's the deets, is the Gmi Index, and that is the Gonna Make It Index, formed by Lucas and Index Co-op and a couple other of startup protocols such as Friends with Benefits, Visor Finance, UMA. There's definitely and even Olympus DAO. So there's definitely a lot of possibilities for Rook to be considered into an index, and I think one of the unique things about these particular products is we want to give financial independence back to the people. We want to give financial independence to the individual user. I think that's what really drew people into crypto in the first place, was to allow the non-reliance of financial professionals. I believe that everybody can manage their money responsibly, and I believe that we should have that choice with responsible indexes and assets, such as the BED index, such as the Gmi index. And also there's other assets too, like the data index, protocol. There's all these different possibilities that can be involved with independence on these products.
Awesome. Well, hey, this has been super insightful. I think that I just kind of want to send off your section here with just kind of a final question of, as a treasury that is already diversified, what is your opinion, kind of the number one benefit from passing this proposal?
I think the number one benefit, as I explained before, is a network effect of Bankless. You have the brand Bankless behind this asset, right? So I think also from a treasury perspective, you're diversifying your portfolio. You're diversifying and kind of reducing your risks of volatility and subjective market volatility. And I think also one of the questions I saw was, why is Rook not in the Gmi index? I can tell you that this is something that we can definitely bring up to the Index Co-op team as well as with myself. So we can definitely work on those things. But back to the point with the reason why this should be in the treasury is for diversification. We want to reduce the volatility in the crypto market by diversifying your portfolio. By reducing this, you're now enabling your treasury to fully function. If one particular coin goes down, this one can sort of offset those losses. And it's also a very easily understandable index. And you also have, as I mentioned, the social capital behind it. If you have 100,000 followers from Bankless, and if you have 18,000 followers from the Bankless DAO, you are now capitalizing on a network of about 120,000 Twitter followers. And we've seen from UMA Protocol, they have seen significant uptick in their community engagement because people associate Bankless DAO in their treasury with this index. So I think there's a lot of great benefits from a tangible perspective and also a non-tangible perspective.
Awesome. Well, hey, I really appreciate Air Bear and Bo for coming in, talking a little bit about Bankless DAO and the BED index. Thank you guys. I hope you stick around. But I think we're going to transition to the second part of this, and let's get the Maven 11 guys and Maple Finance guys to hop on and start talking about the Maven 11 pool on Maple Finance and their proposal as well. So again, Air Bear, Bo, thank you very much. And why don't we welcome Gabor and Sid and Balder to the stage and let you guys talk a little bit about your proposal.
Thanks, Deeds.
Thanks, guys.
Thanks, guys.
Hey, guys. Thanks for having us on board. So very excited this is Sid here, co-founder of Maple. So very excited to present our proposal to KeeperDAO. So in summary, what we're proposing is KeeperDAO to participate as a lender on Maple. To take a step back and unpack what that actually means. Maple is an institutional lending protocol built on DeFi. So the way that it works is that we have obviously three key participants. So we've got borrowers on the one side. These are crypto native companies. They're predominantly market makers, market neutral funds, but this is part of our mission at Maple to expand the digital economy. And then on the other side, which is where we would love to see KeeperDAO participate, we have lenders. Now these are institutions, individuals, degens, who are participating to earn a yield on their stablecoins by lending into Maple pools, so that they can then fund loans to crypto native companies. And then sitting in between those two, we have the manager of a pool. This is what we call a delegate, and this is where Maven 11 has partnered with Maple and set up a pool. And this is where we would be in our proposal, having KeeperDAO deposit its funds. So again, to recap, this would be a lending opportunity, funding loans to crypto native institutions by depositing in the Maven 11 pool. And some of the key things to note here is why we think this is strong and a total no-brainer, is that the pool is lending only to really top quality institutions. So these are, tier 1, tier 2 market makers in the space. Some of the relationships that have been built up over time include Alameda Research, Wintermute, Amber Group, and then on top of this, you have the pools being very well diversified, which is important because what we think is that risk management is super important in DeFi, and that what we've tried to do here is really build in strong risk management frameworks into how the protocol works and how pool delegates operate these pools. And the other element is, of course, transparency. So if anyone were to go on the Maple web app, they would be able to see all of the borrowers in the pool, the source of the yield, and the performance of all of these loans. And that's something that really sets Maple apart as an approach by doing undercollateralized lending publicly on the blockchain, as opposed to the black box solutions which are out there when you lend or deposit with a CeFi or a centralized lending solution.
I think that is super cool, and it kind of, lets me, as I think about, how we could deploy funds with you, it makes me think of, well, how how could I, as an individual, want to interact with Maple Finance? And my understanding, if it's correct, it is the same way, where either a DAO Treasury or an individual could help supply your pools. Is that correct?
That's absolutely correct. And what we've seen so far is that we've seen strong interest from DAO Treasuries so far in using Maple as a source of yield. So we've had several deposits, and we currently, in addition to talking to you guys, which we're really excited about, we've started to see growing interest, particularly since we actually did a panel on DAO Treasury management, because we think this is an increasingly important issue for our communities to be aware of. You've got a number of DAOs that have now raised funding or taken in community contributions, and it's really important for them to extend their runway, but also to manage their treasuries in a really thoughtful, prudent way, because after all, they are stewards of that capital. And so the way that we feel Maple slots in is that any DAO treasury should probably be thinking about their stack of capital and the allocation in terms of risk buckets. And so you might have sort of quite low risks, which would be money market protocols like perhaps Compound or Aave or Curve for that matter, and they would fall into a low risk bucket. And then you would have a slightly higher or moderate risk bucket. And I think this is probably where Maple falls, in that it's under-collateralized loans. So there is an additional risk element, which is not the case in over-collateralized loans. However, it's quite different when you actually look at how protocols like Maple are constructed. So you would have seen what happened with Curve. Well, with over-collateralized loans, you obviously have the attack vector of collateral valuation, whereas with Maple, the main way that risk is managed is that pool delegates like Maven would perform in-depth manual due diligence on borrowers to assess and make sure that they're totally creditworthy and capable of paying back a loan because they have sufficient profits or cash flows, and they're not over-levered. And then in addition to that, the money that's deposited on the protocol is then lent out. So Maple typically would have a 90 to 95% utilization ratio. And that means that most of the time, there's actually just not that attack surface, which would attract hackers or smart contract vulnerability in the first place. And then again, these are single-sided pools as well. So that's one element of risk management. The other one that we take very seriously is that ultimately these loans are enforceable. So the borrowers are KYC'd, they provide their financials, and they sign enforceable loan agreements when they enter a relationship with the protocol and take out a loan with the pool delegate. So we have tried to cover risk management in a fairly robust way. And on top of this, at the protocol level, you also and then have this reserve, which is available as a kind of on-chain credit default swap, if you will, that offers protection if there are some defaults within the pool. So that's like, it's like 3 layers of risk protection here.
Very interesting. So then can you talk a little bit, as my understanding might come up a little bit short, can you talk a little bit how the lenders in the pool earn yield on their asset and what that yield looks like and where it comes from?
Yeah, absolutely. So the yield is earned by depositing stablecoins. So in this situation, a rough walkthrough of the process would be that KeeperDAO deposits USDC into the Maven pool. From there, Maven would make an approval decision on loans to market makers. And remember, we're only targeting top quality market makers. So typically these would be north of $100 million in net assets on their balance sheet, and they're usually trading hundreds of millions, up to about 8 to 10 billion a day in trading volume. But they're market neutral. So broader crypto asset prices go up, they go down. It doesn't impact the profitability of the market makers. Typically, they are pro-volatility, as in volatile markets are good for them. But I digress. So Maven 11 would approve loans to those market makers. And then the source of the yield for KeeperDAO is it's going to be about 9% in USDC, which is the interest on the underlying loans. And then on top of that, there's the kicker from the Maple liquidity program, which is Maple governance tokens would be provided up to about 30% all-in yield. So think of it like this way: you're getting about 21% in the Maple token and about 9% in USDC. And we think that actually makes it pretty attractive because you're getting that more sustainable element, which is independent of the token price, which compares quite favorably with other yield opportunities in DeFi.
So can you tell me, so looking at the Maple token, can you tell me what the future is for that token and how that's going to be utilized?
Yeah, totally. Currently the Maple token can be used in the protocol. So there's a couple of things to be aware of. So up front, a borrower would pay an origination fee. That's about 50 basis points. Part of that goes to the Maple protocol treasury. Part of it goes to Maven as pool delegate running that pool. And then the other element is staking. So how this works is that when a borrower is paying interest in the pool, most of that interest goes to the lenders. So in this case, that would be KeeperDAO. And then part of the interest goes to that reserve I mentioned, offering protection to KeeperDAO, and then part of it goes to the delegate. Now, to access that part that goes to the reserve, you stake the Maple token and USDC. So what that means is that if you hold Maple token, and let's say you're a DAO Treasury, if you also hold USDC, you can stake it into a reserve, and then you begin earning 1/10 or 10% of the interest cash flows coming into the pool. So you can imagine that over time, if as the pool continues to build in size, it will be earning more interest, and therefore more cash flows would go to people or DAOs who have staked the token to that pool. And so one thing that's been a bit of a burden that we would readily acknowledge is that people have been averse to impermanent loss on staking a token with USDC. So I think in our future, we would look at things like single-sided staking as something that would make the token easier for people to use and therefore more attractive or palatable for a DAO like Keeper to hold and to stake in pools. And then earn some of the interest cash flows in those pools.
Awesome. Well, let me quickly pivot over to the Maven guys, and just can you tell me how'd you get in touch with Maple and how'd you become a pool delegate, and what was the most attractive part of becoming a pool delegate?
Of course, we can. Thanks for being here, and great to see all the attendance here on this community call. So yeah, we met the Maple team, I think, around this summer of 2020. So I think at that time, Sid was around a year time building out the idea of Maple Finance. They just closed their seed round when we start to meet them. I think it's September 2020. So we missed the seed round, and we said, okay, well, we are very intrigued by what they're building. And we got a lot more conviction by staying in touch with these guys about how they go about the product, how they looked at DeFi and TradFi markets, and also the speed of execution. I think from on all ends was very impressive, at least for us as a venture investor. So we stayed in touch. We continued to provide feedback on the product and how we saw the product shaping up. Decided to do an investment on the seed round, which was around I believe February, March of this year. And then obviously, I think if you're an investor in the space, you need to perceive this as being an ecosystem investor. So we say, okay, if we're going to do an investment into Maple, let's also make sure we're going to be providing a lot more than only capital, which I think is definitely being accustomed these days. So we said, let's take it upon us to be a pool delegate. Obviously, it's a big task. Going from a venture fund to being a credit fund is definitely a big task. So we got it into touch with Gabor, who's also on the call here tonight. He runs a big portfolio for a credit fund here based for a European bank. And we said, okay, we need someone to assist us in all the credit assessments we're going to be seeing on a day-by-day basis. That's the first thing we want to be comfortable with. And then secondly, we then want to make sure we're going to be handling the operations and also the sort of the sales side to provide lending capital towards these pools. So the pool is now live since June. we started off with around 22 million. We bootstrapped it with a lot of our partners and VCs and friends in the ecosystem. And from there, we have seen a continuous growth to the 120 million where we are today. We continue to see a lot of demand for borrowing with very attractive yields, like Sid earlier alluded to. And Gabor is the guy who has been running the most of the credit assessments. And again, right, so it's a side activity today, but we take it very seriously. There's 3.5 people, 4 people full time on assisting Maple and being a pool delegate in this ecosystem, building these relationships with these market makers and market neutral funds across the industry, which is obviously key to the sustainability of the product, but also to Maple Finance. And we're going to continue to build this out.
Maybe I jump in here as well for 1 minute. So also from my side, great pleasure to talk here in this audience. So I started just to add a bit of more color and how I got into this. So I started actually as a Maple community member and having a credit background, investment banking, 10 years, managing a large leverage portfolio. And Sid actually brought me in touch with Maven 11, who were to become the first or one of the first pool delegates on the platform. And I found this extremely fascinating that Maven 11 puts up all this efforts, dedicating this number of FTEs that Boulder just mentioned. Given that as a VC, you're obviously chasing other yields than what we are here tabling as a fixed income product. And still having the dedication to build a protocol and help beyond just providing VC money, seed money, but really engaging also with more capital in form of staking and also being an active LP has been really impressive for me. And so we are taking this very seriously and trying to bring as much as of the best practices that we see in the TradFi world in terms of credit assessment and risk management, but enhance this then and evolve this over time by real-time analytics as Maple is being built.
Very interesting. As someone who came from the real estate world, what I see Maven and Maple doing, kind of reminds me of let's say hard money loans that somebody that is refurbishing a house that needs to be torn down and completely redone from inside out is a way for them to get money. So looking at that, have you guys thought of, is there a way to extend this to more kind of CeFi companies, investment companies that need access to capital that you're providing, but they're not typically crypto native?
Yeah, that's a very good question. So the way and that's exactly what we've thought about is like, how do we enlarge the underlying market of let's say borrowers. So I took like an innovator's dilemma approach, right? Where we said, let's start with the people who have the greatest need for capital, but where there's like effectively a niche that's, a niche or anomaly that's created by liquidity constraints. And so that was why we serve market makers that were crypto native first, pretty profitable, pretty strong balance sheets, but totally closed closed doors when it comes to getting loans from traditional banks. And the reason for that is that they view crypto as kind of alcohol, firearms, and tobacco. So the natural extension there is, how do we expand then to the next players within, like natively within crypto, and then beyond that, how do we then expand to CeFi players who are perhaps slightly outside of crypto but adjacent to it? And that's definitely how we view, the path that we want to take. And part of getting there will eventually be by achieving a lower cost of capital, which allows us to serve a wider set of borrowers, particularly those who already have, somewhat ready access to capital. So I would see sort of, a natural path for us would be crypto trading funds, then trading funds that perhaps are, doing, say, traditional equities or a hybrid mix. And then, eventually expanding to industries or sectors like, say, SaaS companies. So that's really how we take DeFi and bring it to the world, and really showcase how it's just 10x better than what's already available to these guys.
That's awesome. And so I got one last question, and that is, so I think that roadmap you just described is very smart. But looking at someone like us, have has there been considerations to, if the fit was right and the capabilities were there, to have DAOs become pool delegates, or for DAOs to take loans on from your pool delegates?
Yeah, there absolutely have been those discussions. Probably more developed on the borrower side. If you are an aficionado of sushi, you can see we actually lobbed a proposal in probably about 2 to 3 months ago, when they were considering their treasury diversification round. Now, at the time, for a bit of background context for listeners, Sushi was looking at selling its token at a discount in a down market to raise stablecoins. Now, that's quite a high cost of capital to do that. You're effectively selling the equity in the protocol at a discount. What we proposed was a loan to the Sushi DAO. That loan would have been collateralized with Sushi tokens because they are otherwise sitting idle on the DAO's treasury balance sheet. And what excited us about Sushi was that they were actually earning, recurring revenues, unlike a lot of other DAOs. But I think increasingly we will see DAOs that do earn sort of consistent monthly or annual recurring revenues, and that's what makes a good borrower. Strong balance sheet, strong cash flows to repay and service debt, and then another exciting aspect was that the DAO could potentially issue token rewards, which would therefore attract lenders who were aligned to its long-term success, because they would be, in effect, creating kind of new asset class, right? Where they have lenders could get the yield plus a bit of a kicker in the form of token rewards from the DAO. And what the DAO would get in return is a far lower cost of capital, in that they would be selling less of the protocol to raise a similar amount of money, and overall debt is just generally a lower cost of finance than, say, selling tokens. So that was DAOs as borrowers. What we are looking for now is DAOs that have strong recurring cash flows. These are fewer in number across the DAO space, but we're seeing more of these emerge, and so we think that's a very promising front. Then on DAOs as delegates, if we think, DAOs are effectively just coordination mechanisms it's kind of, a far more efficient way of setting up a company that is sort of containing or, run by people across different jurisdictions. And so there's no reason you couldn't in future have a DAO pool delegate, provided you had the right expertise there, and that they could bring a strong reputation and relationships to that role, because it's very important for the protocol. And so we obviously need to take very seriously who we would bring on board, or rather governance needs to take seriously who it would approve to hold that role. And so, yeah, in summary, what we would be looking for is a DAO that has very strong credit expertise, very good reputation to bring capital into its pool, and very strong relationships in order to source deal flow on the borrower side, whether that be with other DAOs or other crypto native forms of institution.
That's super cool. Very, very interesting. Well, before I say goodbye to you guys, Sid, Gabor, do you guys have anything else that you want to share with us before we kind of transition to the next part of the call?
Like we're all gonna make it, or?
I hope so.
It was a pleasure to be here from at least the three of us here, and great to be pitching this to the DAO in this case, and I hope we got across the message in a good way. I think it's a great, interesting proposition, and we hope to continue the relation from here.
Yeah. Just echoing that. Very happy to have been kind of received and hosted by you guys. We're totally open if anyone has any questions they'd like to submit to answering those. And in summary, look, we think this is a total no-brainer for DAO treasuries. It's relatively low risk. The rewards or the yield is strong. It's single-sided. The protocol is really built on the principles of transparency and risk management. So yeah, we would be very excited to have KeeperDAO on board, and hope that you guys feel the same.
Awesome. Well, hey, thank you guys, and so thank you, Airbear, Bo from the Bankless DAO, and then Sid, Gabor, and Balder from Maven 11 and Maple. You guys, thank you so much for coming on today. Everybody in the audience, be sure to go check out their proposals, which were linked in the announcements to this call, where Bankless DAO is looking to have our treasury invest $1 million in the BED index, and the Maven and Maple proposal to have us invest $3.5 million in the Maven 11 pool on Maple Finance. So go check those out and leave your comments on there. But really, thank you guys for joining us today. And I think this is the last part of this call. I've just got some minor housekeeping updates. The first is I got a PO-up for everybody. So if you do want a PO-up, send me a DM after this call ends, because I won't be able to send it to you until I hang up. So wait till we wrap up this call. Send me a DM about one thing that either Maven, Maple, or Bankless DAO said that you liked. And so that's how you're going to get the PO-up is to make a comment on the call today in the DM to me, and I'll send you the link to claim your PO-up. In terms of other KeeperDAO updates, we've got a couple governance updates. So I don't know if any of you saw our announcements, but earlier this week and last weekend, KIPs 2, 3, and 4 all passed. So with KIP 2, which was the emissions reduction for the hiding vaults, those are now live. And so that new emission schedule is up and running. So KIP 3, which funded labs throughout the end of the year, is exciting. It's up and running. The biggest part I'd like for you all to take notice of is that in the budget, there was 250 Rook for community grants to be given out by the labs team, which I think Lapras and the guys have already seen some fantastic discussions on that. And we've already seen community members step out and really separate themselves by contributing, and we're looking to grant them some Rook already. So, just a quick shout out to, I think, some folks that have been contributing really well. You had Daddy Maddie working on some of the treasury activities, and Breeze as well. So just if you're interested in anything that you think you could earn a community grant for, why don't you pop over into the channel in our Discord and throw your idea out there, or start working on something and present it. And we will, we want to take care of our community. And then the last KIP that passed, KIP 4, was taking 100% of our revenue weekly and performing a buyback. So that also passed, and that first buyback of Rook is going to be happening soon. As we said, those buybacks will be happening randomly once the accounting has been done, as we're trying to not have those buybacks be front run by people. But once those buybacks do happen, we will make an announcement as well. And then the very, very last thing I've got for the call today is just a really, really huge shout out to all the super hardworking people that are working on the CVX KIP in terms of the research and due diligence that's going into that, which really, it's a very impressive piece of work. So, the update that I've received on that proposal is that it is in the final stages of being drafted and being published, somewhat in the next day or so. And what we're going to do is that we're going to host a town hall tomorrow at 1 p.m. Pacific time, so 4 p.m. Eastern time, to talk through the final details of that KIP and see if there is consensus for us to move it forward towards a self-on review and token holder voting. So join us tomorrow, 1 p.m. Pacific time, for that town hall. I'll do a special announcement on that, and we'll tweet out it as well. And then we're going to look to kind of more formalize, the governance proceedings. So stay tuned. I'm working on some solid efficiency stuff with some of our really big brain folks that have been thinking about governance. And so I just want to say stay tuned, but please do hop into our town hall tomorrow and help us see if there is consensus on the convex KIP. But with that, that's everything I've got for today's call. I just want to give another huge shout out to the Bankless DAO folks, the Maven 11, and Maple Finance. Go check out their KIP proposals on the forum. If you've got any of your own ideas, do submit them on the forum. But everyone, thanks for joining us today. It looks like we had a record attendance in our audience. So excited that this is growing and becoming something that you guys are happy to participate in. And if you've got more ideas for these calls, feel free to reach out. But if you want that POAP, DM me your favorite thing about today's call, and I will be catching you all tomorrow in the town hall. So what's the deets signing off, and thank you everybody for joining.